We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is CEO of Scottsdale Mint, Josh Fair. Thanks for joining me today, Josh.
Yeah, thanks for having me. Yeah.
So I'd like to start by maybe having you tell us a little bit about how you got started in this industry and let's say the beginning of the Scottsdale Mint story.
Yeah. So I was one of the odd ones that I actually went to school for risk management. So that's what my degree was. And I moved out to Arizona from Florida and got involved in the mining segment right away. So this was about 20 years ago now. And within a few years, I just kind of learned what was going on in the West and kind of carved out a niche for myself with the firm that I was with. And literally within about 5 years, I ended up becoming the North American mining practice leader for handling corporate risk management for some of the world's largest gold, silver, copper mining companies. And pretty much my clients were the CFOs of these companies, and just really kind of learned the ins and outs of the guys that were digging it out of the ground, looking for it, working then with the refineries. And so it was involved in lots of projects in Latin America, Africa, from a construction and, financing and just learning, environmental issues. And really at that time, I fell in love with the metals and got involved in investing and I've been an investor, some good, some not so good in the Canadian mining sector for quite some time. And I've traded futures on a personal and professional level this entire time. So I really fell in love with the metals and realized, hey, while I was involved in insurance and I liked insurance / risk management, I just had such a great passion for metals and really had an idea that, at that time, and Scottsdale Mint, we're 13 years old now. So let's go back, let's say 15 years ago, there really was there weren't a lot of brands in the precious metal space. Really, people were at that time pretty much just trading old Engelhard bars, Johnson Matthey bars that were pretty much, melted and produced in the 80s and 90s. And there really wasn't any new brands at that time. And so I wanted to kind of fit that new pocket that didn't exist, which was creating a brand that wasn't just going after grandma's money, going back in time. This was even before there was much internet sales of precious metals at this time. So it was a lot of the old style people were calling up, and some of them are great companies. And then there's some of them have had reputation of going after grandma's money, kind of used car salesman style. So I just wanted to create a product, a brand that was a little bit higher end, more like the Mercedes-Benz, and put the word precious back in precious metals. So that's how I started that company. And the first sales were in 2008, which was, we had at that time, that was the real estate demise in the US and what a train wreck of a time to start a new company. But in this segment, it was a wonderful time. And so leveraging some of the relationships that I had on the refining side, I was able to kind of start those relationships and get started. And at that time, we outsourced to about 5 different manufacturers. And now, since that time, when Scottsdale first became a full-fledged manufacturing company I believe it was 2011. And I purchased the investment bar division from a company called Materion. They're still out there. You can look them up on the New York Stock Exchange. And they produce primarily sputter targets, high-tech electronic stuff for the glass, a lot of like high-end cell phones, iPads, those types of screens. And at that time, they were involved in the bar business, but they didn't really like the single-digit profit margins. They loved making stuff for companies like Cree, some of the other semiconductors, where they're making 30-40% margins. So that was a great way. They wanted to divest out. I picked it up at that time, but with the whole notion to really, really fully embrace the full scale of being a mint, not just on the bar side, but like coin. and really, yeah, since that time, I mean, we now manufacture for more than 20 foreign governments, private banks. For your Canadian followers, we do a lot of the stuff. You'll see our products on TD Bank. A lot of the bars that you buy that say TD Bank, they're produced by Scottsdale. So private banks, as well as government banks, and then probably, I think more than half our business still is overseas. So we're feeding dealers in Germany and all over Europe, Japan, Singapore, Australia, and really both on a contract basis where we make the products for them with their name on it, or it's our product and our brand. And really the same thing happens in the United States. There's a lot of great bullion dealers, whether they're online or physical stores, that we make products on their behalf, even if it has their name on it, or it's one of our products. And so, yeah, the last number of years has just seen, we've just been developing the business and just executing it. And there's been some amazing years, and then there's been some tough, lean years where precious metals were out of vogue. No one really wanted them, and you fine tune your craft. And I think we can talk about it. The world changed last year. When governments decided to shut down economies. Whether that was the right move or not the right move, that's up for debate. But it happened. And so as governments get involved in people's lives and there's distrust of governments, that's really when I think precious metals start to really kind of connect with people as to why to buy. I mean, there's all kinds of great reasons like inflation or the currency that you're involved with. But really, to me, the core crux of why I own precious metals is distrusting governments. So we'll let the viewership decide for themselves whether or not are they trusting more or less those that are in leadership. And this is throughout the world. So this is, I think, what an absolute macro trend that we're involved with for those that are paying attention, to really not necessarily set their sights on the short term, but kind of just look at what's taking place on the big scale. So I know I've kind of moved fairly quickly, and we can, definitely, talk back a little further.
Absolutely, Josh. So, well, I'll pick up that one thread here with what we've seen, let's say, over the past year and a half. So, with your perspective in this business, can you tell us about how the demand picture has picked up, let's say, since January 2020? Kind of what factors played into that, and what you've seen over this just over a year and a half here?
Yeah, demand was at what I would call at least a decade low the first 3 years of Trump. And we saw, you couldn't miss in the stock market. You couldn't miss in real estate. Pretty much anything you bought just went up. It was kind of nonsense, but it is what it was. Things were roaring. Things were amazing. No one wanted precious metals at that time. So those demand was really suffering, and it just wasn't really of a lot of interest. And frankly, that was worldwide. That was all over the world. So when Corona hit, it all changed. I mean, overnight. It went from I think we did in that first week of, if I go back to, was that March now? It's almost been a year and a half, March of 2020. I mean, I remember having to wake up, 2-3 o'clock in the morning, start trading, on the floor of my bathroom. It was like stumbling awake, and like I just knew, alarms were going off, trade, phone calls are ringing from our dealers overseas. It was nuts. So I remember just sitting there, and my wife checked on me at like 5 a.m. She's like, "You're just sitting, in your bathroom on the phone, trading on your laptop." And I'm like, "I don't have time," and really that's a great kind of explanation of how it kicked off. And, at that time, my blood pressure's rising, and it's just like, oh my gosh, the world has changed. And frankly, it really did. And that was when, we really haven't looked back. It's just, demand has just continued to roar. And then as we turn into, 2021, probably a lot of the viewers are very familiar with, the Wall Street bets, and then what evolved into Wall Street silver. They kind of went from moving from GameStop and AMC, and they said, "Hey, let's focus on silver." So suddenly it's almost like a repeat all over again. And the tough thing for us is So if 2020 was a record year demand, and I mean by record, a couple multiples, the February, March, and April, at least that 3 months I know were a 5x for us from last year. So everything that you do, all your systems, your staffing, your everything, it's just blown. And so for us to execute became really, 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 really tricky. And, it's possible to work overtime for days, weeks, but when it turns into months, your staff gets tired and you got to keep going. So it's been tricky because you can't just hire new people on the spot that know what they're doing and able to do it. And frankly, when you bring new people on, you actually get less efficient. And so it was just, bringing people in together and making sure we could execute. And then also making sure that whenever we took orders, whether it was a government, a bank, a dealer, or a retail consumer, we also sell direct to consumers. We always had that metal secured. So that was some of my large, one thing that I do is on the procurement side, making sure that we've got flow of material that's coming in from, I think last year we ended up probably working just on the silver side, I think it was about 14 or 15 different countries around the world that we were bringing in metal from. So just making sure that that's coming in and logistics has been a nightmare, whether you're putting it on a container, you're going air, you're going freight ground, nothing happens on time, on schedule. So it's been tough. And the nice thing is about our company now, we've got literally our head of logistics and planning now, literally used to run the U.S. fleet of ships for the U.S. Coast Guard, did all their planning for months at time. So just bringing in people in that can handle this type of what I would call high stress level of just making sure that everything's flowing to keep things fed. That's been, a little bit on the demand side, like a little inside picture as to, what it takes to make sure that material is coming in and produced and getting back out the door. And really, I would say for the last year and a half, it's a hard thing to say we can't make anyone completely happy. And because it just demand has outstripped. And that's really true at any large on the manufacturing level. It's just demand has outstripped supply of production. Thankfully we've had the raw material, but we can't make enough bars, coins per day, per week, per month to meet the demand. But we've seen it this summer. I think it's very common. We didn't see it last summer because that's when the lockdown started to kind of hit, if you remember, last July, at least in the States, I remember. So this summer, things kind of opened up, relaxed a little bit. So we actually have caught up a bit as a company, which has been fantastic. So some of the hires that we did make this spring, they're kicking in. We've had, equipment takes a year to year and a half out. And, so equipment doesn't necessarily, you're not able to have, add new equipment overnight. But, thankfully we did make some investments last year that are now, kind of percolating into our production. That's at least alleviating some of the bottleneck in some spots. But again, we just saw this past Sunday, the flash crash in gold and silver Sunday night, and demand just starts to go, through the roof again. So here we go. And it's just a matter of, does this kind of continue? Does it continue on the demand side, or does it kind of pause again? But it seems like it's just one thing after another kind of happens in the world that's causing, really, it's all driven by consumers to want to own the metal. And that's just what's really driving this demand right now.
So Josh, I'd like to talk about the other side of the equation. Obviously, we've seen demand just spike like crazy. And like you said, it's been really, really difficult to keep up. But how hard was it for you to get the raw materials that you're using to make the products that you're trying to get out the door? And maybe as an aside, tell us what types of raw products you're taking in. Are they 1,000-ounce bars? Are they silver grain? What kind of products are you needing as raw material? So
we're not a refinery. So there's really, think of in the metal space, there's three sets. There's the guys that dig it out of the ground, the miners. You got the refiners. The miners ship in the doré. and to purify it to a 3 or a 4.9 purity. And then they provide it either to the exchanges. But if they can get an extra penny or more, they send it to someone like myself, who's a fabricator, meaning I'm going to turn it into an end product. So really everyone specializes. There is some overlap, from here and there, but those are really kind of the three majors. So thankfully, just based on relationships, based on my history and background, we don't have any sole supplier agreements, which has been fantastic for us. Whereas some of the other guys, they have one major banking relationship. We saw that a couple of years ago was Scotiabank, Scotia Mercata. They basically financed, I would say, two-thirds of the precious metals industry. So a lot of people that had their banking relied on one bank. Well, they cut their lines and they walked away from a lot of the industry. That really hurt. So thankfully for us, we negotiate every truck, every shipment, and each and every week. So, and we have great relationships. So when things got really hot and heavy, we always were able to get it on the silver side. It doesn't mean it was always available when we wanted it, where we wanted it, but we're always able to make sure it was coming in. And there's been times where our vault capacity, and we have 2 vaults here in Arizona in Scottsdale, they were at capacity. We could not get any more metal into the vaults. And so we had to then work with third-party vaults, Loomis and Brinks, and literally pre-position metal that we already had. And then, kind of bring them in so we could handle them all at the same time. So these are things like, well, can't you just make a bigger vault? And you're like, well, yeah, but these, it's not like building a new closet or something. So those are some interesting challenges on the silver side. Gold has been really interesting because when Switzerland locked down, and Switzerland's the largest refining of gold capacity in the world. So when Switzerland really locked down, it got really very, very, very tight. But thankfully, some of the European refineries that are even in Switzerland, they also own refineries also around the world. So we really worked with them. We brought in a lot of material out of Hong Kong. A lot of material came out of Australia, Brazil. And so when it seemed like certain countries were down, and then they got back up. And so gold, gold can be flown in fairly inexpensively, whereas silver, you don't want to put on an airplane in bulk. So you're putting those on container ships. So, gold, it was a tough situation. So on both the gold and the silver side, we bring in both what would be considered as grain or shot, or we bring in large bar format. So gold, there's times we're bringing in 400-ounce bars. We're pulling those, working with people to pull those off of vault shelves to bring them in. Then obviously we got to melt them and work with them. And then same thing on the silver side. So we bring in both the large bar format, the 1,000-ounce bars, or we also bring in grain. So we can handle it any which way. And so, yeah, it's been an interesting time. We've not, contrary to what has been told, we've never had issue getting raw material of silver at all this entire year. That includes the time of what I would call the Wall Street, kind of chaos this spring. And that doesn't mean that we could get all the silver back out the door. So what I was trying to say is the raw material was there. We had it secured. So at the end of the day, money talks and paper, I call it paper walks. So our business is a cash business. So we're securing that metal, and we're just working with our providers as a true end user. And we're not a bank just trading in the paper. So the great thing is, and I paid a little bit more to get the material. So a refinery has a choice, or their mining company. So depending on who owns the metal through that output, they can decide where they're going to sell that. In a traditional market, it just goes to the exchange. Well, if Josh is able to spend an extra dime or 5 cents on hundreds of thousands of ounces at a time, that they're going to sell to me all the time. So that's where we were able to kind of front run the banks. And that's what's called, there's a gap. There's the spot price that everyone sees, and that's a cash price. Well, that is not really cash. That is considered for future delivery in New York. And so you still have to stop it and pull it out. The banks need to take a fee, and then you got to ship it. So you're probably talking, you're talking, especially in COVID land, you're talking a good month. If, depending on when that date's coming up, it could be even longer. So whereas the metal that we're working with, you want it now, you're going to pay a premium. So we saw that gap rise on the silver side. What used to be in a traditional year, it's a penny, it's 2 pennies, it's next to nothing.
We saw, price.
On top of spot, just for the raw material versus that price. We've seen 30, 40, 50, 60, 70, 80 cents even all the way across the board, just for that raw material spread difference. So again, if you're used to paying, what I would call pennies for that raw material, you're now paying a lot more. So what the consumers are now seeing is, hey, my silver bar price is higher. Well, the reality is costs have risen on the mining, the refining, pulling it out. I mean, just all along the way. And so those costs are now, kind of being passed on, all the way through the system. But that's for metal that's like, legit real metal. And so when we lock in that metal, we know the brand, we have serial numbers on the bars. So we know when that material is coming in, there's a spec sheet on it, and so that allows us that says, hey, if I know something's coming in, even if it's 2-3 months out, I can work with my dealers, my wholesalers, and explain at least the best of that flow, what this is looking like. So it's kind of a feat, I guess if you let's say you worked at McDonald's, you still have to do the same thing with chicken, with beef, with eggs, buying soda to keep it flowing in. I mean, but it's on a mass scale. And so I'm guessing, just from what I can tell, just any commodity right now, it's hit and miss. I mean, we saw lumber, lumber skied. Now it's all the way back down again, just this year. And it's like, again, did we run out of trees? I mean, the answer is no. Is there some restriction on trees? Is availability issues? And I do think one thing that is interesting, for probably a lot of the viewers know why they might be interested in investing in gold and silver, is the actual consumption versus new supply coming in. So we're in a deflationary environment for supply, meaning we are now consuming more silver each year. It's going into phones, electronics, it's going into healthcare. Oh, the Green New Deal, we want to do how many solar panels? Well, mirrors get made with silver. So this is a very interesting dynamic. And my take is they don't advertise that silver is going to be a big beneficiary to what called the new world we're heading into from an economic standpoint. So they're not advertising go out and buy silver, because we're kind of destroying their world. We're raising their costs with what's going on. So you do not hear Elon Musk talking about investing in cobalt. You don't tell him he doesn't promote the things that he needs to make his batteries in his cars, right? He wants to keep it suppressed. And that's kind of an interesting topic. So there are groups, there are users and suppliers in the market that they don't want to see triple digit silver one day. But just as you kind of look at the market demand and what's happening, I've used the term in other interviews, it's a journey. I don't think consumers aren't going to crunch the market and silver's going to sky in one day. It's more of a journey. But the trends that we're seeing with demand, this is generational. And what I mean by that is new people are being ushered in into this segment that did not buy gold coins, silver coins, or bars, previously, and now they are. And they're looking at it as just another way to hedge their family's assets and their future.
So, Josh, I want to go back to something that you were saying about premiums. So I just want to clarify, in your experience, this explosion of premiums wasn't necessarily indicative of you guys not being able to get raw material supply, right?
A little bit of both. So there was a tightness, meaning, and we're still seeing this issue around the world in silver. So silver premiums are not really coming down. And so it's an issue of, you hear on, you hear reports about people having issues bringing in electronics or computer chips. And a lot of that stuff is actually made, but it's sitting at a port and there's not enough shipping containers to get it moved. Well, silver is the same way. It goes in shipping containers. It's just that Brinks might be moving it on specialized ships, or they're doing, or they actually send people that ride with it. So these are interesting things where the silver might be ready, it just can't get picked up. So then that becomes a situation of what are you willing to pay? So if all my silver is here in New York and I can ship it in days, or you want to buy metal that's in Hong Kong, and it's in Belgium, that's you're going to have to wait weeks to get it cleared through customs in the port. So how much more are you willing to pay? And there's a financing cost. So if you're buying that metal in another continent, you're paying interest in theory, or at least cost of capital, to get that material to the port that you want. So you might be willing to pay a bit more. So that's kind of why we're seeing that demand rise. And I do think there is an effect of, you've seen, I'd say, some of the ETFs that actually deal in the real metal, they are taking down bars as well. So it's the ETFs are competitors to the banks. Companies, mints, users like myself or a Tiffany, a jewelry company or electronics company who's buying raw material, they're competitors. And we're willing, if we can pass on that cost, to pay a little bit more than the bankers. They're just shuffling paper. So we're getting it before the exchanges are getting it, if that makes sense. So that's why there's a premium. When demand is lower, it almost is equal with the exchange. And frankly, dealing with an exchange is easier. If you can just send in 600,000 ounce trucks, semi trucks, hey, you're a refinery or a mine, hey, send 20 semi trucks to the exchange, it's done and dusted. You can move on, versus working with suppliers that are taking half truckloads or full, only one truck at a time. So these are, but again, you can get an extra dime on 600,000 ounces. I mean, anyone can do the math on per truck. I mean, that's a truck weighs out, the semi truck weighs out at 600,000 ounces. So that's if you look at the COMEX in and out, it's used a lot of times it's in 600,000 ounce increments, or close there. So that's kind of what's causing that premium. And then on our side, we're running overtime. We're trying to we're competing with the same problems that other people are competing with, trying to take care of your employees, keep them motivated and working hard. But meanwhile, they've got kids that, they're getting, calls, and they've got a shutdown at their school, or they got to quarantine their kids. And so suddenly now, what do parents do? And so, I would say, companies like Scottsdale Mint, we have to deal with all the same stuff everyone else deals with. And at the same time, we just can't hire, temp staffing off the street. Here, come make gold for us. It's just not a simple feat to manage.
Mm-hmm. And how were you able to vet, let's say, suppliers when you had to go around the world to find the supplier? Are these existing relationships you had?
Yeah, these are existing relationships. So let me say that. So if we bring in something from, let's say, it is a Hong Kong, these are not randoms. These are mining companies that we know. These are ones that have been vetted financially. They're either LBMA or COMEX approved material. What I would call it's a known provider. And so we're not, buying from Tom, Dick, and Harry off the street. A lot of that material goes to Dubai. So we don't deal in any conflict minerals. So everything's got to check. I mean, we have very strict Patriot Act, very strict protocols of the material that comes in. And then everything comes in on a spec check. So if you get a shipment in, they give you the assay, you take an assay, and either matches or it doesn't, right away. So that way, it's in this business, it takes years and years and years to build a reputation. It takes one incident to destroy all of it. So that's kind of how that world works. And so if you're bringing it from a good party, and then my companies, we do it's no secret, but we do a lot of partnership JV with other technically competitors. So there's PAMP Swiss, that's based out of Switzerland. And then there's Heraeus, which is also, they're in Germany, they're all over the world. And so we actually have a partnership with both of those where they produce some semi-finished material for us over in Europe. And in conjunction, we do some silver product for them for the North American market. So it's all about strategy. So maybe in some lanes we butt heads with some of these companies, like in terms of competition, but we all try to work together, help each other out where we can. And so we have a lot of those strategic partnerships. So you just try to stay in your nucleus of companies that you work with, and just know that you're working with great material.
So Josh, as your background is in risk management, how do you think about applying that background to, let's say, running the mint?
Hire smarter people than I am. So yeah, that's a great way to, I'm a visionary. And then, obviously, whether it be financial, operational. So, really people always think risk management is always insurance. And the reality is insurance is actually, you're selling the risk. So if you own a home, if it burns down, you can either mitigate it with fire extinguishers or sprinklers. So those are things that you can do to help control it in the event something happens. But the reality is you're selling that risk. If I'm out of town and that fire goes off, I've got that insurance to cover. So really it's operational risk management, supply chain, It's anything from your own staff to potential just internal problems, external problems. It's stuff from the inside, stuff from the outside, anything that can happen, and to make sure that everything is fully interlocked is kind of how I look at it. And then I also look longer term. So even going into, call it the Wall Street bets weekend, when that hit, that January 31st, I knew something was coming. So our company took a extra long, and I mean quite extra long position going into the weekend with silver, just knowing that if something happens, we want to be available to provide. So that came in very, very happy. So that's where, sometimes you're handling, you're mitigating a little bit of risk based on, your sales or demand of what you're seeing. And we've been doing things strategically this year, just looking at equipment, looking at what equipment can we, if we don't have redundancy on, are there spare parts that we can have extra spare parts on? So, it's almost like, internally you've got a checker and then you have a guy that checks the checker. So we're doing everything we can operationally to be better. We're not perfect, and it's been high stress. And so the question is, how can we get continually better and continually improve, and then bring on new customers? And that's where, literally probably just recently, we've been turning down so many customers, this year. We've just been trying to take care of our current base, and that's still pretty much what we're doing. But if we are able to bring on a new customer, if and when, we want to make sure that we're doing our darndest to be within a reasonable window of our estimates.
So how do you also apply, let's say, that skill set for private investors? Are there places that you think that investors are overlooking risk when we're looking at the precious metal sector?
Sure. I think, if you're investing in mining companies, there's, traditionally there's operational risk, geopolitical risk. What countries are you in? And, you're seeing, some years one country might be an amazing country, and then suddenly they've got a political change, a new party that's in there. And now they want to either nationalize. I was just reading this morning, Kyrgyzstan just nationalized a gold mine there. They're alleging that there was some fraudulent dealings, and so they took it back. I think it's like 1/5 of the country's GDP. So it's a big deal. So if you own only one thing in one country, right, you've got a risk. So how do you hedge that? And so I've actually done huge 100+, hundreds of millions of dollars insurance policies, and worked with in Canada, EDC, Economic Development of Canada, to protect mines in Latin America. What happens if the next Hugo Chavez comes in and says, "I love this gold mine for myself," and they just take it away? Well, they can basically nationalize that mine in two ways: just taking it, cutting your leases, cutting your whatever, or they just raise your tax rate to 100%, and then it's just you're done. So companies can insure it. So mining companies, and they should. A lot of these mining companies are not hedging their assets around the world, and I know this because I worked in that industry. These insurance policies might cost a couple $1 million a year. But the reality is, what if you had $100 million if you lost your gold mine in Venezuela or Colombia or wherever it might be? You could at least take that money to go develop a new site somewhere else. And so companies should be looking at, on the investment side. That's on the mining side. On the consumer side, it also comes down to, a lot of times people say, if you can't hold it, don't trust counterparty risk. And that's valid. We believe in that as well. We make the product and we deliver it to you. However, if you had everything that you have in your house, and someone came in and put a gun to your child or your wife's head, you're going to hand it all over, right? So, the reality is you don't want all your eggs in one basket within this space. I think precious metals play a wonderful role. And, so maybe some people have access to quick metal that you can touch that's there. Maybe some of it's in different vaults around the world. And we, as our company, we work with many, many, many vaults around the world, and we kind of help, whether you're a guy that's got a law firm practice and you've got substantial amount of assets and you're going, you know what, I want to have a couple geographic splits on their metal. So we'll consult with, higher end, demand needs of investors, all the way down to the smaller guy that's only got a few grand. Maybe you put in your safety deposit box at the bank, but there's also downsides to this as well. What happens if, we've seen this in California, they can just seize it all, and then you have to prove when you bought it and how you bought it. And so maybe that's not the best route. So there's so many, pieces to the puzzle where there's no one shoe fits all solution here. If that kind of makes a little bit of sense.
Mm-hmm. So as part of that, Josh, can you tell us about how you, let's say, some kind of considerations around allocated, unallocated, pooled metal accounts? We've seen some alleged fraud in the past, let's say, year. How do you look at those types of accounts?
I won't comment about, I think there's some legitimacy to some concerns in some of these situations. I also think some of it could be overblown based on what I don't like is when one person who's either paid by another dealer or competitor or another vault talks maybe not so nice about another company. Even if it's completely valid, there needs to be an asterisk there, right? And just says, look,
some odd incentive there, maybe.
Yeah, and look, so I don't get involved in it. We just do our thing, and just look at. I think it just comes back to the whole don't have all your eggs in one basket, and but I do like from a vaulting standpoint, I like when vaults are audited. You can potentially visit it, take a peek at it. Sometimes they have requirements for certain sizes, but you'd be surprised what you could do. And then also, third party audits. We're involved. We soft launched it a few weeks ago. We're about to formally launch what's called stackermarket.com, which is based out of Singapore. And we looked at a situation where there's what I would call more traditional storage. I have a bar or a coin and I'm going to store it in this vault. I think if you do that, allocated, segregated, that you have it, you've got a serial number on your bar. That makes sense. But there's a cost to that, and it can be pretty high. What we've created is it's not a pooled account. It's still allocated. It's still allocated to the entire pot of Stacker Market customers. But we're selling what's called fractional ownership of that bar. So if we have a gold kilo bar that's $60,000, you can literally buy and sell $1 at a time of that bar. But those are audited, and we have it checked. We've got big accounting firms and the Singapore customs as well. And in Singapore, if you mess up or do something wrong, you're in big problem. But what we did there was create that's vaulting where it's the opposite of everything else that's out there. There's no storage fee. It's free storage for life. So for example, gold is a 1% trading fee to buy the metal, and it's there. It's physically there each and every week. So each day, we're managing the buys and sells. And at the end of the week, we're actually physically moving in the metal that's in and out each and every week. And that's both on the silver and gold side. But what's really slick about it for those that, let's say you wanted to buy gold and hold it there for 10 years, technically we would lose money on it because we do have an insurance, there's a fee for us. But we've created a solution that allows customers to kind of come in and out of both gold and silver at very low trading risk or trading costs and 100% liquidity. So you're able to trade. One of the tough things that I always like to, one of the hindrances of the physical market that I'm at, let's say you buy $100,000 of silver bars, you ship it to your house. Well, if you wanted to sell it right on the spot, who's going to take that order? You're going to need to find someone, get a quote, ship it. They're going to have to validate it before they get it. Obviously, if you're selling back to whoever sold it to, it's a lot easier. But these can be a little tricky. Versus, the question is what if a spouse bought the metal and 5 years later they're not around anymore, and someone takes it over and they go, well, I don't know what to do with it. Well, in the Stacker Market situation, you can buy and sell it 5 minutes later. And so that's a really interesting solution. And then we also have loans that will be coming out. I think it's about 30 more days where you're going to be able to say, again, let's say you've got, I think the minimum will be $25,000, but let's say you have 100 grand for case in point. Gold is up to 60% loan to value ratio. So you could take it. Interest rates will be, let's say in that 4 or 5-ish%. And if you needed to put a deposit on a car or a home, but you didn't want to sell your gold or your silver, and have a taxable event, you're able to, borrow that for 1 year. And literally, I think it's a 48-hour loan. So there's no origination junk that you have to go with a bank. So we've created a solution, and we've got some really new things that are coming out with it. Conversely, it almost operates, probably some people have looked at how do I get an offshore bank account? It's very, 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 very difficult. Well, we've created a solution that's kind of has some parallels here to where, let's say you had 100 grand of silver, 100 grand of gold, and we have a debit card option that's built in, and it works right now. And I believe there's 8 currencies. So let's say you sell, you need to buy a coffee for you and your friend. It's $8. Maybe you're going to buy a muffin. You're at 15 USD. You can take your gold or your silver and just sell what you need, and it slides right over to that Visa, and you're able to check out at Starbucks or wherever all around the world. That's a global platform. So this is available for all countries in the world minus sanctioned nations, and there's no fee. There's no fee for the transaction. So how we make money is we make money from the merchant. So just like a rewards program, the consumer gets 3%. Who's paying, or not? The merchant's being charged 3%, and that 3% is getting divvied up to the merchant. Visa, and then the bank issuer. So we're the bank issuer essentially on this situation. So we've created a new model where our revenue is generated through a tiny bit on the trades, nothing on storage, and then on the transactional side, and then obviously a little bit in the event people take loans. So this was actually created for the Southeast Asian market, where instead of states, like in America, we go from Texas to New York to Arizona to California. We're all using one currency. The tough thing in Southeast Asia is they're bouncing Vietnam, Cambodia. A lot of the businessmen, they have businesses, real estate all over. They're getting dinged and hit with bank charge every which way. And a lot of these nations, they don't trust the underlying currency. So this was really a solution that's been in operation now for quite some time. And we're really, really excited. We'll be announcing, we're plugging into, and this could be a supply side. We're plugging into what we'll be announcing will be 30 million new users that will be instantly KYC'd here in the United States through a white label version of this program, and being able to send money back and forth. And that's one feature I didn't mention is, again, let's say I owe you $100 worth and I wanted to send it to you in gold. I can do that in a blink of an eye, and it would cost me 25 cents to send it to you. So that's where, so this is a different solution where we can hold it and send it back and forth. We've got a very complex KYC process, very similar to how like the crypto exchanges. So if you were to sign up, you have to take video of your face, show your utility bill. Once you're in, and now it can transact like a really unique new program. So our hope is not so much like maybe that fits the current investor in mining or in physical precious metals, but we look at it like I don't really look around for Scottsdale Mint and say, well, that dealer or that mint, those are our competitors. I look at it as the banks. It's how much money does JP Morgan sit on, HSBC sit on. These guys have more money. Those are our competitors, and that's where we want to grow. So we kind of look at these different business segments that we're offering as a way to bring in new buyers. And so if we can make it real simple for someone to buy gold and silver, whether it's my solution or someone else's solution, I think the groundswell of new demand, new education that's coming into precious metals, it's going to be a wonderful decade ahead for the price appreciation.
Yeah, and that's something that you and I were speaking about before we hit record here, is kind of bridging that gap and educating a new generation of investors into really the benefits of, let's say, cryptocurrencies, or really the idea of sound money, right?
Yeah. And I think that's So we talked about it, so called the Wall Street community, the online forums, the Reddit boards. They're doing a wonderful job of educating people about why buy gold, why buy silver. The other one is a segment that I think the precious metals industry a lot of times bashes and doesn't like, and that's the crypto space. People that like Bitcoin. I actually embrace it. I think it is, once someone takes the red pill of why Bitcoin and why crypto, they suddenly learn that it's a very similar mechanism to actual physical gold and silver. I'm buying a scarce product that has a limited inflation cap each and every year. And eventually supply and demand, when supply and demand are unequal, price goes higher. And I think we're seeing that in the crypto space. So if too many people want to buy Bitcoin or Ethereum, the price goes higher. And there's only a limited supply minted each year until it gate capped. Well, that's gold and that's silver. And so what I think we've seen is, maybe a little bit of shenanigans from some of the banks. The markets are a lot bigger. The gold market, I think, is estimated around 10 trillion. Whereas, it's called the crypto space has been kind of hovering in the 1 to 2 trillion. So it's got a ways to go. But I think people do get red pilled as to why am I going to own these things? And, the difference probably between precious metals and crypto is, crypto is common that once every year or 2 years, it'll have an 85% wipeout. So that's not fantastic. So whereas gold rarely sees 85% wipeouts like that. So it can be volatile. Silver can be volatile. So I want to put an asterisk there. But I think that's an interesting, parallel. And I think it's okay. I think we're going to be bringing in people that are in the crypto space who may have shunned gold and say, whatever. And they like to say, look, it hasn't gone anywhere for the last 10 years. Well, what about 20 years? We were at $200, right? So today, 17, 1800, that's not bad. In 20 years, I realize if you pick the line again on any scale, depending on where you pick it, you can make something look good or bad. I can do the same. We could do the same thing with Bitcoin. If you bought it at 65 and we're down a third, right? It's all about where you pick it. And obviously those are fairly new products. And I think it fits a portfolio to say, should you have all your money in the USD? Nope. Should you have all your money in crypto? Probably not. All your money in real estate? I think we're finding out that people need a diverse allocation. And so we're going to pull in, I think the precious metal space will pull in people that want almost just like a stable coin where they're getting out of Ethereum or Bitcoin and they're just parking it temporarily based on the US dollar. Well, you might even want to park it instead of US dollar, you might want to park it, with physical gold that has some utility as well. So I think we're going to pull people in that kind of hemisphere. And I've been involved in that space for about a little over 4 years now. So in terms of, personally experienced trade, send, use, my company's involved in it. It's really just another asset. I think people get too stuck on the word currency and going, I'm not going to use Bitcoin to go to Starbucks. You're not. That's probably foolish. It's too expensive. Use Stacker Market app for that instead. We have less fees. And but Bitcoin's being purchased as an asset that's going to appreciate. That's why people want it. It's basically digital real estate. So once you kind of wrap your head around that, it's kind of what gold and silver are. I don't know if we're necessarily going to be using, physical metal to go to Safeway or Albertsons to buy our groceries or wherever you're at in Canada, Hortons to get your coffee. So, I think, but it has a place of asset allocation. So I think, longer term, I'm excited. It's the use case, and the use case and the need case is only growing, especially as the fiats of the world. I mean, no one even knew the only industry that even knew what the word fiat was were people that were considered gold bugs or silver bugs for the last 20 years. Now fiat is becoming a little bit more of a household name in the crypto space. And so they're learning this whole money printing issue that's happening, with governments all around the world. And everyone thinks the Federal Reserve is bad. Well, no one's is anyone paying attention what Europe's doing, what Japan is doing. I mean, they are printing every which way. So which currency do you own? So this is where, we're going to, this segment's going to do very, 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 very well, I think.
Mm-hmm. And Josh, just to kind of, wrap up on that idea that you're saying there's all these different countries that are printing into oblivion. and you talked a little bit about the volatility of the gold and silver price here. So as investors, most are purely focused on price, especially in the short term here. So give us your thinking around how people should maybe conceptualize the potential that the metals have more longer term versus just seeing price retreating like we saw this week here.
Yeah, I think at the end of the day, everyone wants to see price appreciation, but appreciation to what? So I think there's a little bit of misnomer right now, even going on in the housing. Everyone's like, dude, I'm making so much money on my house. And it's like, you are you? Where do you go? This is an inflation issue. So I think you can take a snapshot and why you say maybe your asset's going up or down in one sense, but that's also connected to credit. And so the reality is if credit were to weaken, you're going to start to see some of those premiums in real estate. They're going to start to evaporate, at least they could. They could also just keep going forever because it's just, who knows what's going on. But, at some point, precious metals, there's a finite supply of it. Only so much of it is out there. It has lasted throughout history. It has always had a role to play. Even when it gets shunned and called a pet rock, it comes back. And I think, you're hearing terms of a great reset, these new things that are going to happen. We don't really fully know what all that means. What I think it means is we're going to see a lot of changes. Well, this metal, gold, is on the balance sheets of the biggest central banks in the world, and they're continuing to buy it. And so they have their underlying fiat currency, and they are using gold as a currency pair. So for those familiar in the crypto space, a lot of people do currency pairs where they're doing some liquidity pools. And so they may have Bitcoin and Ethereum pairs. They may do some different pairs. And so really the central banks are doing that with gold. They're just not telling the common man, why are they still involved in gold? They tell us, the Warren Buffetts of the world, they say, oh, you can't, why own gold? What he isn't telling you is that he owns the largest jewelry company manufacturer called Leach Garner. You can go look it up. It's a Berkshire Hathaway company. And because he was slapped, again, it was probably about 20 years ago, for owning too much silver. He was cornering the silver market and was slapped around by the CFTC and said, you have to liquidate. So he sold, but then he bought a company that's involved in precious metals. So you tell me, you got to pay attention, not to what they're always just saying, but what they're actually doing. And so these are people that say that there's no utility value, but I think, long term, with the distrust of governments, what they're doing. I mean, U.S. government's announcing how many trillions, what's a trillion anymore? And so at some point, the underlying precious metal is going to have to reset itself. So, and there's a lot of theories of what that could look like. Could we one day wake up? It's possible. I think in the short term, we can get that whole, the boy crying wolf. It's going to happen tomorrow. It's going to go to the moon tomorrow. Silver's going to be triple digits tomorrow. And when it does, and I think sometimes our industry can get a little like, hey, is it ever going to happen? And we get a little frustrated, especially the newer people, or even the older people that have been around forever. But, let's take a step back and just look at the market fundamentals. Eventually, if you're right and you sit tight, you're going to start to see some of the fruits of that possibility come in. So gold and silver, they're insurance, they're a hedge. It's a diversification against where you work, where you invest, where you live. It should be part of everyone's portfolio to some degree. And I do think when it takes dips, that's when you add, as opposed to getting, if it starts to take off, don't worry too much about trying to stack from a dollar perspective, but stack for an ounce perspective and just build that net worth. And long term, I think there'll be a time where you're very, very happy about that.
Absolutely, Josh. I couldn't agree more. Do you have anything else you'd like to add here before we wrap up?
No, I think that was about it. I appreciate your channel. I've enjoyed, it's refreshing to, one positive thing to call it the shutdowns or lack of travel has been the content has been up. So channels like yourself, you've had, fantastic interviews and content that's out there. It's almost like you're going to get more education on a channel like this than you are going to college. And I mean that wholeheartedly. So especially to the younger generation that's paying attention to this, soaking up this content. You can be watching this kind of a podcast while you're working, doing something else. You're going to learn more from podcasts like this than you are from, going to a university, and probably listen to a professor who may have failed at business. So not all of them, but a lot of them.
Excellent, Joshua. I really appreciate that compliment. Of course, you guys are available at scottsdalemint.com, and was it stackermarket.com?
You got it. Yeah. You can check us out. We'll be making some more announcements on that, but yeah, it's operational right now. So check us out, and definitely give us a feedback, and we hope to, be on your channel again when there's more market activity going on, and we can give some updates at a later date.
Absolutely. Thanks so much for your time today, Josh.
All right. Thank you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.